Welcome to the Deep Dive. Today we are getting into something pretty serious, actually. It's that one real estate nightmare scenario, the one everyone in the business hopes they never encounter, the post-closing ownership crisis. Just picture this for a second. It's maybe the ultimate real estate horror story. Your buyer, they're thrilled, they just closed on this beautiful Florida home, maybe 6 months pass, everything seems fine. Then bam, a certified letter shows up, attorney's letterhead. And it says the person who sold them the house, they only own, say, 75% of it. And the lawyer's client, some surprise heir nobody knew about, owns the other 25%. Suddenly your client is looking at lawsuits, maybe losing equity, the whole deal is just falling apart. That kind of devastating, completely unexpected problem. That's exactly why title insurance exists. So our mission today, it's really aimed squarely at you, the realtors working hard, right here in Manatee, Sarasota, and the Tampa Bay area. We want to equip you with the real practical knowledge you need, so you can explain title insurance not as just another closing cost, but as, well, essential protection, professional guidance that you provide.
Think of yourself as the shield. We're here to sharpen that shield today.
Okay, so let's define this because it's unique. Title insurance is really the only insurance product out there that looks backward. Everything else, homeowners, car insurance, life insurance, it protects against things that might happen down the road, right? Title insurance. It protects you from disasters that are already lurking in the property's past, hiding there. It's a one-time payment, that's key. And it gives you peace of mind, basically, for as long as you own the home.
I like that backward-looking insurance. That really clarifies it. But it brings up a really common question, doesn't it? One that buyers definitely ask. And you, as their realtor, you really need a solid answer for it. If the title company does this super thorough title search, checks all the public records, why do I still need the insurance policy? Shouldn't that search catch everything?
That's the million-dollar question. And it gets right to the core of why people get confused. So when a title company like us at Barnes Walker gets ready to issue a policy, we do conduct an incredibly detailed search. We're digging through public records. We're looking for judgments, old mortgages, easements, deeds, you name it. We call it hunting for curative issues, which is really just, legal speak for cleaning up old messes, fixing historical mistakes or ambiguities before you close. But here's the absolute critical difference. That search, it can only uncover what's been publicly recorded, what's visible on paper. The insurance policy itself, that covers the invisible defects. These are the claims, the problems that even the best title search on earth couldn't possibly find. So once we clear those visible issues, the insurer issues the policy, the guarantee, and if one of those hidden problems does pop up later, the insurance company steps in. We handle the legal defense, which means your client isn't paying massive attorney fees out of pocket, and we cover the financial loss up to the policy amount. It means, well, no sleepless nights over it.
Okay, that makes the distinction really sharp. The search is the homework, the due diligence. The insurance is the actual safety net for the hidden stuff. And that leads us right into the biggest challenge you probably face with clients, especially, in this Florida market, with so many cash deals. Buyers wanting to skip the owner's title policy just to save maybe a few hundred, maybe $1,000, thinking, it'll be fine. It's new to me. How could there be an old problem?
And that thinking, that attempt to cut a corner, it's basically rolling the dice on potential financial ruin. We see it most, like you said, in cash deals. Why? Because there's no lender involved forcing them to get a policy to protect the loan. Buyers just assume, hey, the title search came back clean, so I must own it free and clear. But again, that only covers what was visible, what was recorded properly.
So let's really break down those invisible defects. These are the specific risks that you, the realtor, need to be able to clearly explain to show why that policy is worth it. What are those main potholes a client could fall into without insurance?
Yeah, let's focus on maybe the top 4, the big ones that even a perfect public record search won't catch. First up, the hidden lien, often a mechanic's lien. Imagine the person who sold the house had a fight with their roofer, right? Refused to pay the final bill. Maybe that roofer filed a lien just days before closing, or maybe they messed up the filing and it doesn't get properly recorded until after your client owns the house. That debt, it attaches to the property, not the person. So guess who inherits that unpaid bill? Your client.
Ouch. And clearing that up isn't cheap, I imagine.
Not at all. It can run into thousands easily. Okay, second big risk. This one can get really messy, legally speaking. The mystery heir or the missing heir. Let's go back to that horror story you started with. Maybe years ago, someone in the chain of title died without a proper will, and maybe a distant cousin who was legally entitled to a piece of that property suddenly shows up. Years later, Title records can't predict genetics or who might walk in with a valid birth certificate and a claim.
That is genuinely scary.
Right.
Because now it's not just about inheriting a debt, it's someone challenging their actual right to own the home.
Exactly. Which often connects to the third risk, fraudulent or forged deeds. Think about it. Maybe a property transfer way back in the chain of title, say in the 90s, was completely fake. Someone forged a signature, pretended to be the owner. If that happened, then technically every sale since then is potentially invalid. Your client could end up having paid hundreds of thousands for a house they don't legally truly own.
Wow, a problem tracing back decades.
Okay.
And the fourth one, you mentioned it's more mundane, but still costly.
Right. Just simple clerical errors, human mistakes. A court clerk misfiles a crucial document. Or someone types the property description wrong when recording a deed, maybe transposes a couple of numbers in the lot number. That tiny typo, it could accidentally attach your neighbor's easement to your client's property, or vice versa. That single letter or number mistake can mean months, maybe years, and thousands in legal fees, just to prove your client owns what they actually bought.
Or the classic one we sometimes see, the surprise boundary dispute.
Oh yeah. That fence, or maybe a pool deck or a shed, was built years ago, slightly off, based on maybe an old, inaccurate survey. Then the neighbor gets a new survey, and uh-oh, your client's brand new patio is 2 feet over the property line. Title insurance defends the boundary line as it was insured at closing. Without it, your client is paying for lawyers, new surveys, maybe even demolition costs. So when you, as the realtor, frame it like that, you compare the one-time policy cost, maybe it's around $1,000, give or take, compare that to potentially $20,000, $30,000, even $50,000 or more to hire lawyers to fight a surprise heir or a forged deed. Suddenly, that policy premium looks like the best deal in the entire transaction.
It really does put it in perspective. So
Yeah.
let's talk about how realtors can guide this conversation effectively. How do you counter that cost objection with this value?
Okay, first thing, hammer home the one-time payment aspect. It's not like homeowners insurance with annual premiums. Clients get confused. Make it crystal clear. You pay this once at closing and you are covered for as long as you or your heirs own that property. Period. No renewals.
That's a huge point. Okay, second.
Second, you absolutely must distinguish between the two types of policies, especially if there's a mortgage involved. The lender's policy, yes, that's usually required by the bank, but it protects only the lender's investment, the loan amount. If the title completely fails, the bank gets its loan money back. But that policy does zero, absolutely nothing to protect your client's down payment, their equity buildup, their actual investment.
Right, it protects the bank's money, not the homeowner's skin in the game.
Exactly, and that's where the owner's policy is critical. If a hidden defect pops up later, that's the policy that defends your client's ownership rights, their equity, everything they've put into it. Just stressing that the lender is only protecting themselves is often a really effective way to get the buyer thinking about protecting their own interest.
Okay, good practical advice. Now let's zoom in a bit. Why is this conversation about title insurance even more critical right here? In Sarasota, Manatee, the Tampa Bay region.
Well, our area has a really interesting mix of history and development that kind of amps up the title risk. Florida's property records, especially in places that have seen explosive growth over, say, the last 40 or 50 years, are incredibly layered and complex. Think about all the generational land transfers, the huge farms that got subdivided, land swaps back in the 70s and 80s. This stuff often created, well, kind of messy records, conflicting easements, poorly documented agreements from decades ago. You might unearth a forgotten drainage easement from, like, a 1985 land deal that suddenly impacts a brand new home being built today. These kinds of old recording quirks and errors, they're just frankly more common here than maybe in newer areas with less complex histories.
That makes sense. All that history buried under layers of development. And then you add in the current market reality here. Like we said, lots and lots of cash buyers.
Exactly. High frequency of cash deals means more buyers are in that position where no bank is making them get an owner's policy. So they're more likely to try and skip it, thinking they're saving money. They're unknowingly taking on more risk.
So the realtor, you listening, you become even more important in those cash deals. You're not just facilitating a sale, you're really acting as the key risk advisor.
Precisely. You're the first line of defense. And sharing local examples, even hypothetical ones, based on these risks we've talked about, makes the threat feel much more real. It builds huge trust when you show you're looking out for their long-term security. At the end of the day, letting your client buy property here without strongly recommending owner's title insurance, it's kind of like advising them to drive through Florida in August without checking the hurricane forecast. Why take that unnecessary risk?
That's a powerful analogy. It really drives it home. So, wrapping this up, championing title protection isn't just about avoiding disaster for your client. It truly elevates your professionalism. It shows you're committed to protecting their biggest investment, their home, sure, but also their financial future, and really their peace of mind.
Absolutely. And for all you realtors listening in Manatee, Sarasota, and the Tampa Bay region, having the right partner for title work is crucial for smooth, secure closings. We genuinely recommend partnering with Barnes Walker Title Services. Their team, it's an integrated group of attorneys and experienced title professionals. They do those really essential deep dive searches we talked about. They focus on proactively finding and clearing any of those curative issues before closing. That means more security, faster closings, cleaner deals. Plus, they have 5 convenient offices right here across Sarasota and Manatee counties, so they've got that deep local expertise.
And it's worth remembering, too, that for legal support that goes beyond just the title and closing, there's the affiliated Barnes Walker Law Firm. They're a great resource for you and your clients for broader needs, things like real estate law contracts, complex closings, disputes, but also litigation, estate planning, wills and trusts, even business law. A really comprehensive support system.
Secure the deal, yes, but more importantly, secure your client's future ownership. For title services, or if you have broader legal questions, you can reach the Barnes Walker team directly. The number is 941-778-7721.
Okay, before we go, here's a final thought for you to take away, something to mull over. Think about your next conversation with a cash buyer who's maybe hesitant about the owner's policy cost. Instead of just stating the premium, maybe do a quick mental calculation. What's the approximate cost to hire a good real estate litigation attorney in our area for just the first month, maybe even just the retainer? Compare that number to the one-time policy premium. Suddenly, the insurance looks incredibly cheap, right? Use that comparison. Use it to build trust. Show your value, not just push a product. Go out there and make title protection a core part of your expert guidance at closing.